we are contributing about 18%, which is more than US.
Uncertainties of tariffs are still evolving as geopolitical uncertainties have somewhat abated, even though global trade challenges continue to linger. While headline inflation is much lower than projected earlier, it is mainly due to volatile food prices, especially in vegetables. Core inflation, on the other hand, has remained steady around the 4% mark as anticipated. Inflation is projected to go up from the last quarter of this financial year. Growth is robust and as per earlier projections, though of course below our aspirations. The uncertainties of tariffs are still evolving. Monetary policy transmission is continuing. The impact of the 100 basis points rate cut since February 2025 on the broader economy is still unfolding. On balance, therefore, the current macroeconomic conditions, outlook, and the uncertainties call for continuation of the policy repo rate of 5.5% and wait for further transmission of the front-loaded rate cut to the credit markets and to the broader economy. Accordingly, the MPC unanimously voted to keep the repo rate unchanged. The MPC further resolved to maintain a close vigil on the incoming data and the evolving domestic growth inflation dynamics.
Important to look at data in a at a regular basis, at a micro basis, at a month-to-month, quarter-to-quarter basis. We should be hesitant in extracting signals out of that data. So it is the long-term data that is more relevant to be making any to get any insights out of it. And on the other hand, I would also like to point out, so these fluctuations will be there. There will be noise, as you are aware, there will be noise. So we have to remove that noise. How do you remove that noise becomes very difficult if you are actually looking at data on a month-to-month, day-to-day basis. Having said that, housing credit, I think overall it's doing well. It's doing very well. It may have moderated somewhat, but these are to be expected. There will be some ups. I am not the right person to react to the president, but yes, I mean, you are all aware we have a very robust growth rate, 6.5%, and in fact, as per IMF, 6.4% and 3% growth rate of the world when they look at that. we are contributing about 18%, which is more than US, where the contribution is expected to be much less at about, I think, 11% or something. So we are doing very well, and we will continue to further improve.
I think the reaction of Prime Minister Modi has been one of dismay. He thought that he had a friend in Donald Trump. As you recall, they went together to Howdy Modi down in Houston first time around, and Trump was in India. So the Trump administration has taken the transactional approach to an extreme with India, now saying that the trade must be open completely with India. India has had a predilection for protection of its infant industries. It's been very wary of economic imperialism. And it has only been in the last few decades that we've been able to open up and to have economic engagement which is beneficial to both sides. I think that India is very concerned about its relative position, and they're particularly concerned about what's going on with China. China is a bigger importer of oil, for example, than India from Russia, and yet that doesn't seem to have gone into the discussions thus far. The linking of the overall tariff approach with the Russian oil puts the potential tariffs into the stratosphere for India and would put them in a grave disadvantage with the competitors from Asia. So it's exactly the wrong approach. It's not an approach which has been used by Democratic presidents or Republicans in the past, and is not conducive to the relationship between the two largest democracies in the world.